What's up, and peace to the family. You know, as we do every night around this time, I like to go live and discuss a little cryptocurrency. First of all, welcome to my platform, Crypto and Travel, where we discuss crypto and everything travel. If you are stumbling across this channel by accident, please do not hesitate me. If you're stumbling across this channel by accident and you have an interest in cryptocurrency, please do not hesitate to email me at klewis198724@gmail.com. I will list the email down in the description below. Just email me at klewis198724@gmail.com. So that way you can get access to the cryptocurrency consultation program that I offer, and also the cryptocurrency mentorship program that I offer. Everything is super affordable, so you don't have to worry about that part. And I assure you to take the time to sit down with you and bring you abreast to the knowledge and bring you up to speed with everything crypto. So at this time, I'm gonna refresh some screens and we can just go over some charts, man. I'm a cryptocurrency advocate. I've been involved in cryptocurrency now for going on the past 4 years. So I've been through the ups and downs, back and forth, side to side, in and out of crypto, man. So you are here rocking with an experienced veteran. I know some strategies work for some people, some strategies don't. I just like to take the time, to thank you for just stopping by my platform and just to check me out to see what I got to offer. But the cryptocurrency course, man, the consultation and the mentorship program are A1, especially as we are shifting into a cashless society. So the world of finance as we know it is changing, and just give yourself a pat on the back if you are involved with cryptocurrency. Just give yourself a pat on the back for being an early adopter. You know, it's the early adopters in every new phase, whether it's technology, markets. Each phase where the early adopter takes advantage and becomes that early adopter, it always plays out to be beneficial to the early adopter. So to give yourself a round of applause, give yourself a pat on the back if you are involved in cryptocurrency. This space is gonna continue to grow, and it has a lot of room to grow, as a lot of cryptocurrency enthusiasts say that we are in the first inning. We're still in the first inning of cryptocurrency, and the game has just begun. So don't get discouraged when you see prices like Bitcoin over $10,000. Don't let that discourage you, because there's still a lot of room to the upside with cryptocurrency. And if you're on the outside looking in, you probably hear how cryptocurrency is such a volatile market. When I teach strategies, and that's why the consultation program is so important, because I teach strategies on how to protect your investments. When you make gains, I teach strategies. I mean, proven strategies. They work all across cryptocurrency. They work. To protect those investments, I do it all the time. When I make gains, I protect it. You know, and then when the market gates open, so to speak, for me to enter again, when I see a good setup for me to enter, I take my profits and I go back in, man. It's just, I like to say this on my social media platforms. I chart, I trade, I profit, I repeat. I chart, I trade, I profit, I repeat. That's all it is to it, man. I know it's not as easy as said that it is done. But with the strategy and the game that I employ with cryptocurrency and trading and just overall investing, I lay it out real simple. I don't promise any results, but what I do promise you is the empowerment for you to become a more confident cryptocurrency investor. So with that being said, email me if you're interested in cryptocurrency. klewis198724@gmail.com. Everything is up and live as we speak. So and again, the crypto consultation is very affordable. It's only $50 for the consultation, and for the mentorship program, it's $75. And with the mentorship program, you get access to my portfolio. You get access to the trades that I'm making, the entry points, the exit points. You get access to all that with the mentorship program. And the consultation will always be $50, but the mentorship price will eventually rise due to the demand. So right now it's only $75, but that price is only for a limited time. As the demand rises, so will that price, but the consultation will remain the same, due in large part because of the simple fact that the consultation program will be replaced by a course. I will be rolling out a cryptocurrency course, teaching you all the ins and outs, teaching you how to interact with cryptocurrency, teaching you how to buy cryptocurrency, teaching you how to sell, teaching you how to protect your investments, teaching you how to choose which cryptocurrencies to invest in, since there are over 2,000 of them. You have to know how to peruse through the cryptocurrency markets and know which ones to buy and how to evaluate them. I teach you all of that with the consultation program now, which will soon be a course. So you can just go to my website, purchase the course when that's up and available, and you can take that course. It'll be a video course, so you can rewind that time and time again until you master it. And also, once you purchase from me, you have me as a partner, and you can reach out to me, and I respond to all emails, text messages, and DMs, and I get back to you. If I don't get back to you, an associate of mine will get back to you to answer your question, to help you out. We all want to succeed in this new market, in this new space, and that's what I'm bringing. I'm targeting a certain demographic with my cryptocurrency consultation and mentorship programs, but no fear. I'm here for everyone, but I do want to target a certain demographic, and this is the reason why. The reason why I'm targeting a certain demographic is because in the middle class, we always miss out on the opportunities that will change our life and create generational wealth. I often like to say this, how do you know when you missed the boat? Is when you look outside and you don't have a boat. You know, people of the middle class, a lot of us missed the whole technology boom and the internet boom. You know, we missed the internet boom that launched companies like, I'm gonna go all the way back, AOL, Yahoo, Google, Amazon, Facebook. I mean, you name it. We missed that whole boat, and the one reason that I like to account for us missing that opportunity is the lack of education, and that's what I'm providing. I'm providing the education that it's going to take for you to succeed and strive in the new and upcoming and new emerging cryptocurrency market. So, with no further ado, let's look at see what we got going on. Let me refresh this thing one more time so we can see what we got going on. And go live in the chat. You know, let me know what the audio sound like. Let me know what the music sound like. If the music is too loud, I'm getting used to this streaming on YouTube, so just let me know. But anyway, let's take a look at your top 5 cryptocurrencies. This is via CoinMarketCap, and as we can see, let's take a look at the total market capitalization is $287,969,989,432, and that is relatively low. It's a whole lot of room for this to grow. When we are seeking a $1 trillion market cap, that is possible, and you want to be bunkered down and in tune with cryptocurrency when that happens. And you see BTC dominance is at 65.3%. That's Bitcoin dominance. So 65.3% of the money in cryptocurrency is all into Bitcoin. That's what that means. Bitcoin dominance. Bitcoin is dominating the market up to 65.3%. So that means that 65.3% of the money is into Bitcoin versus all of the rest. So that's Bitcoin dominance. Now let's take a look at your top 5 cryptos via CoinMarketCap. You got Bitcoin down 0.65%, down to $10,540. You have Ethereum coming in at number 2. Ethereum, the second largest cryptocurrency via market capitalization, up actually 1.52%, up to $227.05. That's relatively cheap because Ethereum once upon a time hit $12,000 per coin, and it's only $227 right now. Might be worth a look. We have XRP, number 3, the banker's dream, up 1.86%, up to 32 cents per coin. Then you have Litecoin coming in at number 4, up 0.33%, up to $99.81. Litecoin. all-time high was around $330. And if you know anything about markets, they're cyclical. So these coins will hit their all-time high. So it's best to cop them now while they are at a huge discount. Then coming in last but not least, you're at number 5, you got Bitcoin Cash, the newbie's confusion, up 0.38% up to $314.43. Now let's take a look at your biggest gainers. You have Wax. I have a bag. Wax up 49.54%, all the way up to 7 cents per coin. Ren up 16.48%, up to 8 pennies. Bitcoin Satoshi's Vision up 13.3%, up to $156.97. We have Next up 10.38%, up to $1.70. And we have Tron. I have a bag. Get the consultation program, man, because I teach you how to choose which cryptocurrencies to invest in, and it's a strategy that works. You got Tron up 10.25%, up back up to 2 cents, and I'm loving it. Now let's take a look at your biggest losers. Your biggest losers, you have Quant down 7.32%, down to $8.85. You have ABBC coin, the Alcoholic's Dream, down 6.93%, down to 17 cents. You have Maximind coin, down 6.68%, down to 3 pennies. Then the UNUS SCDLEO, God knows what that is. Trust me, that won't be on the list for one of the cryptocurrencies to invest in. But it's down 6.11%, down to $1.25. And Bitcoin Gold. There's a lot of Bitcoin this, Bitcoin that in the market. So that's why it's imperative that you know how to choose which coins to invest in. But anyway, Bitcoin Gold down 5.98%, down to $25.94 per coin. That's what's up, guys. That's what the market looks like. And so let's look at some charts. If you look at my previous video, I like referencing my previous video, especially when I'm right about what I said in my previous video. If you reference my previous video, you will see it's titled Bitcoin Dominance and what it means, or something of that nature. I said that Bitcoin dominance was bound to retrace, and that's what we have here. We have Bitcoin dominance retracing, and I charted this and I called this out like textbook, and it's happening. So why not, salute for being correct. And you have altcoins starting to move, have a little price action movement. Because when Bitcoin dominance falls, that means two things. Money is going into stable coins or altcoins. So anytime you have Bitcoin dominance falling, money is going into stable coins, meaning that you got traders getting scared and putting their money into stable coins, or you have money going into altcoins. So you see altcoins prices price action starting to move up a little bit. And this is the reason why, man. You got Bitcoin dominance falling, man. Back here, this is when I did a video. It was this day here. And I noticed the first thing, I'm just going to go over what I noticed really quick. The first thing that I noticed, let me make this big. Aha. The first thing that I noticed, traders, was we were testing this major area of resistance. This was back in December 2017, which also lined up with that last bull market where we had that crazy, insane run up to almost $20,000. Where it was $20,000 on certain exchanges, but we had that crazy run up to $20,000, and that's when once we hit this spot, we immediately retraced all the way down here. So that was a huge resistance. So I saw that Bitcoin dominance was approaching that level, that same level of resistance. So I said, this could be a good area to have a retracement, right? And also, traders, I noticed that down here on the RSI, we have what's called bearish divergence on the RSI, and we're still diverging downwards. We have bearish divergence here on the RSI, and all that means is that on the actual chart here, let me zoom it on in. Okay, traders. What that means is that here, right? I'm gonna line this up. Look down at the bottom to the indicator, to the oscillator, down here at the bottom. Down here, traders, look. And I'm gonna line this up perfectly. Okay. On the physical chart, right? Up here where you see all the green and red candles, right? Let me line it up. Up here where you see all the green and red candles, we made a high, right? This peak, I'm gonna say peak for lack of better terms, this peak is higher than this last peak. So we created a higher high. And as well, so down here on the RSI, we created a higher high down here on the RSI, correct? And then we moved on, traders, to make another high. See, this peak is higher than this last peak. We made another higher high on the chart. But on the RSI, we made a lower high. So when you see that type of movement on the RSI, traders, that means that this move up on the chart is losing its strength. RSI, relative strength indicator. So what this is telling you, higher high here on the chart, higher high, but on the RSI you make a lower high here. This high is lower than this high, which lines up, see? That's bearish divergence. That tells you that this whole move here is getting weak and that you can expect a reversal. And coincidentally, it happened all at the point where we reached that same major area of resistance that we ran into back in 2017, and we started to correct, meaning price started to go down. So that was the second thing, trader. Resistance, bearish divergence, and then, traders, we made this geometrical pattern known as a rising wedge. Rising wedges, let me zoom it on in. Rising wedges, which is here, I'll make it a little bolder for you. Rising wedge, traders. A rising wedge, which you see here, textbook, rising wedge is a bearish indicator. Whenever you have a rising wedge, that means that the price is likely to fall. I mean, all these bearish indicators in a real, true, strong bull market, sometimes these bearish indicators have no effect on the actual price action, but it's always wise to consider them, right? And so we have a rising wedge here that we formed, that Bitcoin dominance formed a rising wedge, which is a bearish indicator, meaning that we could have a price reversal. So you got three solid indicators, an area of confluence, right? We have three solid indicators all happening in the same area. That's an area of confluence happening on the chart. So it's a strong indication that price action was gonna reverse. Now I got two more that I'm gonna point out before I move on to some other charts. Now this is gonna be a total of 5 indicators, traders. I hope you'll follow me. I personally use my personal strategy. It may work for you, it may not work for you, but my personal strategy is trading with the 13-day moving average and the 34-day moving average. A lot of people use other numbers, 20-day, 50-day, 100-day, 200-day. Some people use the 50, 100, and the 200. You know, some people use the 50 and 100 to get what we call in the trading sector the death cross and the golden cross. I like to use the 13 and the 34. I learned this from a Nigerian trader 2 years ago, and it has, I could say never, but it has failed. All indicators will fail, oscillators will fail from time to time, but a good 90% of the time, the 13 and 34 day never fails, and it always, I don't say always, but 90% of the time it ends up in that same area of confluence where you have multiple indicators pointing to the same thing, and this is what I'll show you here. Okay, the 13-day moving average, traders, is the pink line you see on the chart here, and the 34-day moving average is the blue line that you see on the chart here. So just about anytime you have a pink crossing the blue in the upward direction, price follows. If it crosses in the down direction, price follows. Look at every cross. You got this cross here. And what I've learned by watching the 13 and 34 day moving average is that You don't really go all in or go in heavily on the first cross. You usually wait for the second one. I've learned that just over time. I mean, you can go in on either one as long as you like use other indicators to kind of justify your moves. Never really go off of one indicator, but the 13 and 34 day moving average is a nice solid one. This is why, look, every time you have the cross up, price action goes up. See, this was the first cross and it came back down, right? But look at what happened on that second cross. That's why I love the second cross. Look at that measured move. I have to make the small traders. I just want to do a quick measured move. Let's compare the measured moves really quick. All right. So, where are my rectangles? Sorry, I don't use these often. Here we go. Got them. All right, cool. So I'm just gonna estimate this move, and then I want to estimate this move, and I'm gonna measure each move just to give you an idea of the gains. And this is all just using the 13 day and the 34 day moving average, trader. So now let's measure this move. So this was a respectable 29% move, traders. I mean, you cannot go wrong with a 29% trade. Now, granted, it would have took you a little while to execute this trade all the way to the top. You know, it would have took you a little while to execute. Let me get this out of the way. I have a subscription on Conergy. That's another trade platform. I don't have it on TradingView. I like TradingView because when I use Fibonacci's, TradingView shows the percentage, the percentages of the Fibonacci, and Conergy don't. And for educational purposes, it's good to have those numbers. So that's why I'm on Conergy right now. That's why I'm on TradingView right now, not Conergy. So it would have taken you, traders. I mean, from this point, this is at the bottom of the screen. See if I can make this big again. Okay, traders, it would have taken you a good little while to execute this. This would have been from February 13th all the way to the end of March, or the end of March, you might as well say, or the 1st of April. So that's February, March. So it's like a month that you would have been in this trade, but you would have gained a whopping 30%. So for my large amount traders, you know, I like to trade for 3 to 4 grand at a time. So let's just do some little calculations really quick at the gains that I would have made just a month of not working for the money and not anything. I like to typically enter trades with about $3,000, and you do that times a 30%. Sorry. Oh no, I'm sorry, traders. Wait a minute, I did something. I should have cleared it. So you got $3,000, which I like to enter my trades with, and I'm gonna multiply that by 30%, right? So I would have made $900 in a little over a month just from having my money just sitting there trading, just, you know, watching my indicators and things, and with a stop loss set so that way I could protect my investments. So now let's measure the other move, right? I could have came in, got out of that trade with $900. So now I got $3,900 to enter my next trade with, right? And I would have got out around about the top because I would have used Fibonacci. And Fibonacci usually denotes an area of resistance, and that's what actually happened right here. And typically you don't trade in this area of the field, but when I get my crosses, I like to go with my crosses and just be very careful. So all right, traders, now let's measure the next move on the cross, just using the 13 to 34 day moving averages. So now let's measure this cross. Sorry, I gotta exit so I can get this measured move. Now let's measure this cross, traders. I'm sorry, not this cross, but this. Let's measure this move. Okay. Now you're looking at a 46.54% move on the next trade. Now this would have taken, like I said, this would have taken a great deal of time, but passive income for me, I don't have to work for it. It's all good income. So I would have exited this trade in March, and I wouldn't have entered back into it until June, and I would have got back out. I can't see that date. And I would have got back out in July, another month. I would have exited in March, beginning of April, May, June. 2 months would have went by. I would say, okay, now it's time for me to take my $3,900 that I gained from my last trade. Because I'm a swing trader. I will sit in positions for months at a time if I have to. I'm not a day trader. I have no reason to be a day trader in this. I like swing trades, but to each his own. And I would have took my $3,900 at this point from 2 successful trades just from watching the 13-day moving average. And I do apologize. I would have came out of this trade in September. So I would have entered this trade in June, July, August, March. I'm sorry, June, July, August, September. So it's been 4 months. Been 4 months without any solid, without exiting this particular trade, because I probably would have entered some other trades on some other coins, which 9 times out of 10 I do. If I have one solid move going, I'll let that play out, but I'll make some smaller moves in between time with the same setup, but just different coins, you know what I'm saying? And so 4 months passed, correct? Enter June, July, August, September. June, July, August, September, 3 months. And I would have gained 46.5% on this one. 46.54. Messed up again, and I apologize. Y'all don't clown me. 3,900 times 0. Yeah, 4654. Yeah. So I would have made $1,800 off of that. So now let's add that to my 3,900. So now it's September from the course of, what was this, back February to September, March, April, May, June, July, August, September, 7 months. Okay. So 7 months, I would have made a total of 900 plus 1,800 just for keeping it even. So it's $2,700 in 7 months. So let's divide that by 7. I mean, I'll take $385 a month passively, not working for it, just watching the charts. I mean, I'll take that. I'll take that. Puff Daddy, take that, take that, take that. But anyway, traders, I just wanted to show you, the 13 and 34 had how it generally works. And now let's get back into, if you've been watching this video, now let's get back to those 5 indicators. Okay, so just to recap, to predicting this this reversal in Bitcoin dominance, you had the bearish divergence, you had the rising wedge, right? And then you had it facing a strong area of resistance, right? So number 4, let's take a look back at this. Okay, now using the 13 and the 34 day moving averages, you can go back and see that every time we get overextended from the 13-day moving average, we have a retrace. We ran up, got overextended, we had a retrace. Ran up, got overextended, had a retrace. Ran up, got overextended, now we're having another retrace. So that's number 4, the overextension from the 13-day moving average. Call for a signal, okay, taking consideration that we may have a pullback, right? And number 5, let's take a look at the Fibonacci levels. So just to understand Fibs a little bit, Fibonacci measures this entire downward move, right? So from here, the high, all the way down, the latest high, all the way down to the latest low, right? That's the measures that entire move. And then what the Fibonacci retracement does, it retraces it measures the retrace as we go up. So you can see from here to here, see this is 0 because this is the bottom of the move. This is always 0. It hadn't moved anywhere. And this is the 23.6% move, And so we had a this was, and Fibonacci levels can denote an area of resistance. So you see this area of resistance, we bounced off that 23.6. and came all the way back down, stay right here. And so when I saw that move, I made this trend line, and I knew that if we have to stay above this trend line, we want to continue a move upward. Correct. So we had that bounce off the 23, off the 236. I like to say it. We had that bounce off the 236, and we came back down. And then see, one rule of trading fibs is that you really don't place a trade in this area here. You don't really start to place a trade until we hit this golden zone. That's the golden retrace. That's called the golden retrace. Fibonacci has the golden rule, or gold to mean ratio. I don't want to confuse you, but you usually don't want to start placing trades until we hit this golden retrace. And so as you can see exactly what happened, we played around in this golden zone, and then we eventually broke out of it. And at the area of the 618 is usually when the institutional investors come in and decide to short the stock. And by institutional investors, you have two. You have retail investors and you have institutional investors, correct? Institutional investors are the big institutions, the big money investors. The retail investors are the investors like you and I. So at the 618 is usually around the area when the institutional investors come in and short the market. Short the market mean that they started making bets that the price is going to go down, and so they have the money, so they influence price to reverse, usually around the 618. And at that point, just think about the traders. You had a 61.8% retrace at this point. Right, that's a heck of a lot of retracement from this last low, right? And so at that point, that's the fifth indicator. You are approaching the 618 on the fib, and as all educated and traders know, that at that area, institutional investors like to come in and short. So you had the bearish divergence on the chart. That's one that's signaling price reversal. You had the rising wedge, which rising wedges signal price reversal. That's two, right? Three, you had the overextension. You had the overextension from the 13-day moving average. That was three. Four, you approached a heavy area of resistance that the last time we hit that level is when we dumped back in 2017. Here, back in 2017, we dumped. So that's four. And the fifth one was approaching the 618, the 618 level on the Fibonacci. So that's five coinciding variables that can insinuate a price reversal. So there you have it, traders. That's just a little just a little bombshell. I wish I had the sound effects in, but that's just a little educational and a little TA, for the night for all my viewers who are actively watching and who will stumble across this. And also, and look at what we have going on with this rising wedge too, traders. We are breaking out of this rising wedge. If we want, and look, see, that's why I say the 13 and the 34-day moving averages always end up in that area of confluence where you have more than one indicator pointing to the same thing. Look at how we are falling out of this rising wedge, and if we want to continue a move upward, we have to get back inside of this trend line, right? And what coincides with this trend line? The 13-day moving average. So at the same time, if I didn't have this trend line, I can make the same conclusion in saying that if we want to continue upward, we have to continue to close above this 13-day moving average. The 13-day moving average is somehow always in the play. So that's why I like the 13-day moving average. All right, let's get off Bitcoin dominance and let's take a look at Bitcoin itself. All right, traders. I cleaned this chart up a little bit, but you still can see I got that Fibonacci on this one too. So I'm just measuring the smaller move from the last high. I could feel from all the way here to here, but I just want to look at this last zone. So as you can see, traders, and again, you can see on the Coinigy, this is Coinigy, this is this charting platform. On Coinigy, you do not have the numbers on the fib levels. So that's why I like using TradingView for more educational purposes. But let's take a look at Bitcoin. This is Bitcoin paired to the United States dollar on the 4-hour chart. The exchange that I'm looking at is GDAX. GDAX is now known as Coinbase Pro. As we all know, especially everybody who is involved in the cryptocurrency community, as we all know that Coinbase is a place that you can go and buy your crypto. But Coinbase Pro is more geared for your traders. I like Coinbase Pro better than regular Coinbase. I'm dropping a jewel. Listen up. I like Coinbase Pro better than Coinbase, the app that you have on your phone. For the simple fact that when you buy Bitcoin and cryptocurrency on Coinbase Pro, you can set a stop loss, meaning that you can buy at a level, and if the price in which you bought falls a certain percentage, you can set that stop loss so that way you get kicked out of that and you won't just lose all your money with the swings of the market. Right? And same way, if the you can set a percentage if the price rise. So if the price does indeed rise, you can set a take profit margin, take profit area, and you can take that profit and you can run with it. That's why I like Coinbase Pro. You have more control over your investment. But that's a jewel that I do teach in the consultation program. But let's take a look at what we got on Bitcoin on this 4-hour chart. I see a classic pattern forming. Oh, I don't have my, hold it. I'm tripping. Y'all caught me slipping. Let me throw this up there. I took my RSI off. Didn't know that much. But anyway, I see a classic. Let me do this number here. I don't need that really big. Let me do that number right here. I like it when you move it right there. But yeah, I see a classic pattern forming. I'm not going to get into it just yet. Just take a look at this Fibonacci. So we retrace all the way down to this is the bottom of the move, and now we are starting to come back up. So now I am looking for an area in which I would want to get into this. See, I will not touch this until we come out of this golden zone. Till we get out of this golden zone, I will not touch it, because you can see this diagonal resistance. We are struggling and have been struggling for the last day or so to break this resistance. So if we can break this resistance level, we will probably test this 50% retrace mark here. And we can get above this, I'll get in here and set a stop loss so that way I don't lose all my money. But we're struggling to get across that, and I can see a classic head and shoulders pattern forming. Let me see if I could quickly do this. Oh, there it already is, right there. Sorry. Jesus. All right. That's gonna be the head, and if you go back and look at my previous videos, I love when I see head and shoulders pattern. I mean, you have 3 of them here right here in this small time frame, and they are very effective. So I'm gonna use them. Oh, I see what I'm doing. I see why I keep doing this. SHOULDER, shoulder. All right, give me this. Okay, that's all I need. All right, you have potential shoulder that may form here, and you have the shoulder here. I love these traders. You go back in my last video, and while I got your attention, make sure you follow me on Facebook at Crypto and Travel, and on Instagram on Instagram at Crypto and Travel as well. On my Facebook, I called that last head and shoulders pattern, which worked to a T, traders. So hey, it may work out again. It was the regular head and shoulders. We had the shoulder. I see your shoulder here, your head here, and your shoulder here. That was the regular one. So let me explain the one that we could have forming here. This is the inverse head and shoulders pattern, traders. An inverse head and shoulders pattern denotes that there will be a reversal in price action to the upside. The traditional head and shoulders pattern denotes that we will have a price reversal to the downside. So here we have the inverse head and shoulders, meaning that we could have a price up to the upside. But we would have to complete this shoulder first, though, in order for us to what's my paintbrush? In order for us to in order for us to complete this pattern, we would have to have a move to the downside. And where are my drawing tools on here? I apologize. Measure move, okay, drawing tools. Here we go. Okay, in order for us to accurately oh, here we go. That's why I can't find it. I had my triangle on. Okay, in order for us to accurately have this head and shoulders in order for us to have this head and shoulders pattern play out, we will have to have a retrace. So we will have to retrace at least back. We have to do something like that for that other, maybe not as steep, but we will have to have this retrace for this other shoulder to in fact play out. So, and that will signify a move to the upside. And we want to know how to measure the potential move. You just go back from the bottom. You just go back from the bottom of the head all the way up through the neckline. And let me draw the neckline really quick. I didn't put the neckline on there, but no sweat, I will throw the neckline on. I just do this. So the neckline will be here. So let's just put that neckline here. And the neckline is just simply where the pattern comes and it hits and it retraces and it hits and it retraces, right? So if we have the breakout of this neckline, because Price will have to come and bust through this neckline, and if you want to kind of measure the move that you can have, you just simply come from the bottom of this formation up to the neckline, and there's your measured move, traders. So if this pattern validates itself and we have a slight pullback and form that last shoulder and break through the neckline to the uptrend, you can expect a 20% retrace. So, and this is what a 20% retrace will take us to. So, and this is what you can expect a 20% retrace to look like. So, boom. Right, neckline. So you can see us coming back up and retrace and test this resistance line here. So that's what you can kind of predict for your measured move to be if this head and shoulders pattern does validate itself and we have a slightly fall back towards 10K and we rise up in price and break that neckline. You can see about a 20% gain. So you know exactly what I'm looking at to enter this trade. I'm waiting to see if we indeed break this resistance or if we have a pullback, form this right shoulder. And then once we form this right shoulder, I'm going to see what we do when we stumble back to this neckline to see if we indeed break it. If we start to break this neckline and close above it, so what I'll do even before that is that I'll go ahead and have an order placed once this pattern forms that right shoulder. I'll go ahead and I'll place a buy order about at 10,685, 10,700. I go ahead and place a buy order, and so when we do hit that level, my buy order will kick in, and I'll be in play to grab this 20% or more. And if we fall back to the downside, I just set a 10% stop loss, which will work like this. If I enter in at this is valuable. I'm dropping another jewel. So I'm teaching you how to manage your risk. So if I enter at $10,700, right, and I set a 10% stop loss, right, so that means I'm risking 10% of my money. So that'll be the price will have to drop $1,070, right? So now 10,700 minus 1,070. So if the price falls back down to 96.30, and I'll show you, remember that 96.30. If price falls back to $9,630, I'll get kicked out of the trade. So if I enter this trade, like normally, like we're about 3,000 grand, with about $3,000, right? And I risk 10% of that, traders. How much money will I be risking? $300, and I'm cool with that. That's within my whole limit of risk. I'm cool with losing $300, right? So that's how you manage your risk. Just a 10% stop loss. If I go in with 3,000, I lose 10% of that. It kicks me out. I live to fight another day. It's just that simple. That's how you manage your risk. Sometimes I do 15 to 20% stop loss. Because I don't want to set a real tight stop loss and get kicked out of the trade so quickly. So that's how you manage your risk when you're trading. And remember that area of $9,600? Let's find that level on the chart and see if that coincides with any support or resistance. So you got the 96 right there. So let me get a I just want to see, traders. I mean, you never know. So let's get a horizontal line at that price action. At that price of 96.30 ish. So here we go, 96.58. That's close enough. And so let's just, when you're in doubt, you zoom out, traders. And this is the 96. This is that line, right? And coincidentally, this is the one. So coincidentally, look at the area of support that this line has and resistance has had. Let's zoom all the way back out. Keep following this middle line, because when you're in doubt, you zoom out. What am I? 4 hour. Okay, to make this easier. I'm gonna zoom. I'm gonna go to another time frame just to make it easier. But yeah, look, price came down right to that 96.30. Bounced right off of that. Came all the way up. Came all the way down. Broke through it. Fell to this one. That 96.100. Right? Fell all the way right here. Right? 96.100. Right? And bounced. And once we broke this 96.30 again, see that at this point, this line came resistance, right? Once we broke through it, you see we tested it. You can see we tested this area for a little while before we actually punched through it. But once we got above this 96.30, look, we broke all the way up, hit this new area of resistance here, and now we're working with here to see if we get a bounce off, form this pattern, and come back and retest this. If that does validates itself, I'll be in play to scoop up 20% off this trade. And if it does not, and if it falls back, I will more than likely have that stop loss will be set from this entry point to here, and I'll see what happens here. I may re-enter. If this access support, I will re-enter with a stop loss here. And if we break down here, I'm not gonna catch the falling knife. I don't know, you really won't know at that point how far price is gonna go. So in order to figure that out, you will have to just zoom out and see from this point your next level of support, your next confirmed level of support, which from here you will be looking at about, you could have a fall all the way here, and that's back to 75, but we'll probably stop around in here about 85, 88, round up in here. But after this 9,000, you could be looking at 8,500 ish. So, and that support is not strong, and really until you get right here and be testing a $7,700 Bitcoin. So I don't know, man. If you following me, I hope I'm not confusing you. I dropped a few jewels up in here. So now let's look at another chart. Let's go go to Binance Exchange. Binance is another exchange. Oh, there it is. Binance, ADA, Bitcoin. And remember how I talked about here how Bitcoin dominance was falling, and we're still trying to fall out of that rising wedge. And by when I'm saying when Bitcoin dominance fall, that means two things. That one, the traders are moving their money into stable coins, and two, they are moving into altcoins. And with a big drop, with the fall in Bitcoin dominance, you have altcoins making a little price action. Look at ADA. Look at ADA. ADA is just on a tear. Look at ADA. But let's chart it a little bit, traders. Yeah, that's right. You got it. A little live TA. You got a little live TA. But look at what we're doing, though, traders. We are creating that rising wedge. And we all know what rising wedges can indicate. If we're creating that rising wedge, we can kind of be expecting a price reversal, and we're also facing up a level of resistance here. Like we may catch some live price action if we're lucky. We're also catching the area of resistance here because price came up and reversed here. So let's see what we got. Let's see what we got on the RSI. Let me make this big because this may get good. You may catch a little live TA, little live price action right here. Well, okay, we're oversold on the RSI. And by oversold, I mean that we're oversold. And I'm sorry, overbought. We're overbought on the RSI, and what that means, a lot of people have stepped in, bought it up, and then we're overcooked. But we're not that oversold though. We're sitting at 75% on the RSI, so we still have a lot of room to go on the upside. And let's see, did we get any kind of divergence before this run up? Okay, let's see. Where were your? Okay, we made a low here. Okay, we made a higher low, all that's coinciding. Let's see here. Same thing. Okay. Did we hit a bottom? Was this a solidified bottom? Oh yeah, it was. Okay, so we're making a bounce. So 88 has fallen a lot. 88 has fallen a lot. This is the hourly chart. Let me get out of this. I don't like the hourly chart. I like the 4 hour. I like the 4 hour and the daily. The longer time frames provide more of confirmation. I'm gonna get it lined up in a minute, traders. No worries. So we can see what we got going on here. All right, cool. Yeah, actually, we kind of made a double bottom, and so so this rising wedge is kind of invalidated on the 4 hour, but you still have that pattern forming of that rising wedge, but it's kind of invalidated. But we did kind of make a double bottom though, traders. So we came down here, we bottomed out here. We had a little rise up. We hit this area of resistance and made another low. So we have two areas of resistance right here, really close that we're looking at. So you have 1 and 2. You have 1 and 2 areas of resistance, so we need to break through here. And if we break through here, traders, you can expect a move all the way up to here. Let's throw in a little Fibonacci retracement from your last swing high down to your swing low. Okay, and we are in that golden zone again, trying to break out of that golden zone and have it almost. So we've had almost a 38.2% retrace, which resistance. You see how the Fibonacci again right here lined up perfectly with this area of resistance that I drew with the red line, and you see this right here at the top of the golden zone. It's acting as resistance. I mean, you can't make this stuff up, traders. I mean, you saw them live. I threw the resistance level on there with the red line first, and then I threw the Fibonacci retracement tool on there, and it lines up perfectly. And look at the second level of retracement right there at the top of the 50% retrace. So we got a lot of resistance going on. And I don't have my volume indicator. Let's see what the volume looks like. I like the volume true 20. So let's look at the volume. Okay. Let me format this. Style, column, volume, area, blue. Lighten it up a little bit so we can see that. All right, cool. All right, we got some selling pressure that's coming in. As you can see on the volume, some selling pressure coming in. Overall, we have a downward move, pretty much a downward momentum and volume. And you can see that selling pressure starting to come in. This is the 4-hour chart. That's resistance. Okay, facing resistance here. But it has one a nice little tear though. Man, I'm mad I wasn't paying attention to 88. I have a bag of 88, but I always could have bought some on the side and traded this move here if I had caught this double bottom. You know, I could have just came in here in this area and just bought some, set a stop loss just in case we fell lower. Hate I missed that, but it's all good. I'm not going to chase it at this point. I'm going to see if we can break this level of resistance, and I may nab a little and hold on tight and see what we can do here to this 50% retrace. If we break this 50% retrace, we're going to go up and test this 618, and at that point I'll start to kind of get a little wary because I know traders like to step in here in this zone here. That's where the institutional investors like to step in this zone right here, and they'll like to short. So it'll be probably right up in here. And that coincides with this, you know, when we had this last wick up before we started to retrace. I'll probably step in right here, try to short something. So, I mean, you could get risky and enter once we break this once we get out of this golden zone, have that complete the golden retrace and go towards that 50%. You can get a little risky and just say, okay, once we right here at this level, I'm going in and I'm going to set a stop loss up in this area. I mean, you could get a little greedy and go for that whole thing, but who knows, traders? But I tell you what, though, if we do, though, we broke out of this. You know, so we can easily see a move up to this next field. If we can break this, we can easily see this same move. I don't know why it won't let me clone it on here, but you can easily see a move here, same measured move up to here. And but yeah, if you want to get in and get a little greedy, by all means, but just have your stop loss set accordingly. And last but not least, let me throw in my moving averages, like EMA exponential, moving average exponential. Yeah, bam. Let me get that one in. Let me add another one on. Let me exit out of here. Then let me go and format these. I want my input to be the 13. This is how you set up the 13-day moving average to traders. I like I'm dropping jewels, man. And I like mine to be pink. My 13 to be pink. And let me make that a little thick so you can see it. The width on that. All right, now let me go and format the 34-day. I like for that same thickness. I like for it to be blue, and I like my input to be 34. Okay, traders. Oh, you see. You see, I mean, I cannot make this up. I cannot make this stuff up. As you can see, all right, we're here. Threw up the Fibonacci, right? Fibonacci said the same thing I saw. This is the area of resistance right here. Fib level, boom, proved it. I said, oh, this is another level of resistance. Fib level, proved it. And look at what we got here, traders. We got a bullish cross that's about to happen. If we can get some momentum to step in, remember I talked about the crosses? And if you go back, oh, we just been in a downtrend. You see, the last cross we got to the upside was way back here, traders. June the 11th, you know, we got that little cross up, price quickly went up, but ooh, textbook close and reverse. How about that? Ooh, there it is again. Look, textbook close and reverse. We hit a new high Institutional traders came in. It's CAR, close in reverse. Came in and quickly. This candle closed quickly. Reverse price action. Reverse price action. Boom, all the way down. And look, there's another one. Look. This is what you call a bearish harame, because you can see this this red candle, which denotes price selling off, is slightly smaller than the green one. So that's a bearish harame. But then you came over here. Look at this CAR. Look at this closing reversal here. Textbook. Look at that bearish engulfing candle. Got a little price action moving up when traders. I want to fib this and see what level did we retrace. So we had a high, came up. I guess you can call that a high. I'm gonna go here. I'm gonna fib from here. Let's see, traders. Get out of it, cause I got to. Let's see what levels did we hit before we didn't even get out of the golden. We barely got out of the golden zone, and they just reversed it. So that's why normally we don't accept trades until you kind of get out of that, till the golden reversal completes. But right there at that golden reversal, whoosh, traders came in, institutional guys came in and straight shorted the market and reversed it. That's prime textbook reason why you don't really enter the trade until the golden reversal completes, man. You don't really get in until it completes. Look at that bullish engulfing candle. Boom. Either the little slightest price action. Boom. And so, and each time, look, take a look at price. See, the 34-day count, the 34-day moving average became your resistance level. Look. Each time we came back and tested at 34, we broke above the 13, tested 34, boom, reversal. Boom, reversal. So each time, so that right there with your 13 and your 34, you could have been using that 34, leverage that area as your resistance, and anytime you came up into that area, you had a nice area of resistance. And so now we're actually closed above it, but we're trying to retrace, so we got to stay above that 34-day moving average. So this 13-day can catch up with it and actually make that cross. Continue to close above the 30. It'll be the 13 at that time. Once we make this cross, continue to close above that 13-day moving average to see any kind of uptrend happening, and and another little fun trend line that you can draw just so you can see it. You gotta stay above this. If we ever come down and test this, you can kiss this uptrend goodbye. You can kiss this uptrend goodbye. And I guess if you want to, you can kind of go from this one. God, look at that. That's just crazy. Well, they both are same touches. So you can go from here. This is the latest, the last high. You can go from here. So again, same thing. All of it lines up. You gotta break this area. You got to break out of this triangle. You got to break this resistance area. You got to break that in order you want to see this trend to keep continuing upward. And like I said, we got to get this. We need to see this 13 cross above this 34, right? And continue to close above it. And for this trend to stay validated. And but I'm gonna watch this one closely, because if we break this area. If we break that, if we complete the golden retrace and start to close above that, I'm gonna throw in make a little side bet, a little side trade with 88. Even though I have a bag, I could use this trade to accumulate some more BTC. As we can see, the dominance is trying to decrease on BTC. So I don't know, traders. Let me check the chat to see what's up. To see what's really going on. Cool. That's what's up, traders. That's what's up. That's what's up. I have no action. I guess I'm lame, traders. I have no action, but it's all good though. I'm still gonna keep providing this content. You know what I'm saying? So, so I'm gonna keep providing this content, and I'm gonna keep pushing forward. Whenever you stop by, man, hit that subscribe button. I mean, don't hesitate. Hit that subscribe button. Hit that like button. So, that's about it. Bitcoin dominance. We're gonna see if we continue to reverse. We're gonna see what happens tomorrow night, traders. I'm here about every day live. If I'm not here every day live, I'm here every other day live, making it happen. Remember, cryptocurrency consultations. Email me, KLEWIS198724, cryptocurrency consultation and mentorship programs. Remember, you want to take advantage. You want to be the first. You want to be the first adopter of this new technology, so that way you can see the greatest capital gains possible. And teaming up with me, I can show you how to protect your investments. You know, how to securitize them so they'll actually be your cryptocurrency. Because one misconception is that people think that they'll say, man, I got these amount of coins in my wallet. Like, no, bro. The coins aren't in your wallet. The coins never leave the blockchain. You know, it's your private keys. You have that amount of coins associated with your private keys. So anyway, I don't give up all the juice in one stream. Remember, when you stop by, subscribe, hit that like button. Pound that notification button so that way you can get notified every time I go live. And I'll see you guys tomorrow night about the same time to see what kind of action we got on Bitcoin, family. So always, traders, stay safe, minimize your risk, protect your investments, and I will see you guys on the next time. Peace. I'm out.